Good morning, everyone. Welcome to Monday. Welcome to Monday Minutes. Let's work through this and some bullet points really quickly on this Monday, the start of a new month in June. Geopolitical, still a work in progress. We've got oil a little bit higher today, but we certainly think, if we get to, there's not going to be any definitive conclusions, but if we get to some short-term resolution, there's certainly room for oil to come down from here. We also think in conjunction with that, rates will be in tow. We don't think it's a big duration grab, but certainly rates have room to go lower from here if oil comes down. This month, new Fed Chair Kevin Warsh, the meeting on the 17th, the FOMC on hold here, starting to price in rate increases, which we don't really favor in general, and we don't necessarily think will happen. Elevated inflation short term. We think a couple of things. We think the new Fed chair will be talking about trim mean measures of inflation, trying to strip out some of the volatility. And in conjunction with that, he's going to talk about AI and what that means for productivity as we continue to move forward. But the Fed is certainly on hold here. We think that's appropriate as we work through the issues in the Middle East and we see energy prices that are elevated relative to where we were a couple of months ago. Rates in general, 4.45 10-year, nothing really inappropriate. Like we said, there's room for rates to move lower here. We could move back into that 4.25 range. Certainly if we find a reason to move higher, we can move 15 to 20 basis points higher from here as well. But in general, we still favor a slightly lower rate story, but we don't think it's going to be a big duration grab. And on the economy, we get plenty of data this week. We get ISM manufacturing today. We'll get JOLTS. Obviously, we'll get the jobs report on Friday. The job market in general still seems fairly healthy. It's not roaring, but it's not collapsing either. So relative to the unemployment rate, the benchmark for creating jobs and keeping that unemployment rate lower has come down. So we expect a reasonable number on Friday. If you look at the dynamics in the market overall, not too long ago, we had an unemployment rate that was right around here, and we had oil that was $58 a barrel. We were talking about rate cuts, not rate hikes. So what's changed? The inflation picture has certainly changed. There's definitely nervousness around the inflation rate. It's not necessarily the employment rate. So in a nutshell, we're going to need a little bit more time to move through this pocket of time. And it's akin to last year a little bit, but a little bit different. But in general, capital market activity remains robust. The policies, I think, coming out of Washington in general are very good. We just need to clear this pocket of time in the Middle East. Wishing everyone a great week ahead. I'm Faranello. I'm head of U.S. rates for AmeriVet Securities.